Hey, hello investors and future investors. Welcome back to the channel. In today's video, we're going to be going over one of the most powerful option strategies there is out there to date. That strategy is no other than the LEAPS option strategy. Now, LEAP stands for long-term equity anticipation security. Now, this definitely is a mouthful, but this strategy has helped me grow my portfolio exponentially and it can help you as well. Welcome to Investment Gains. Let's jump right into it. So for today's video, I'm going to be first of all going over what a LEAPS option strategy is, why do we need to use a LEAPS option strategy, and finally I'm going to give you a free resource that can be used in order for you to find stocks that can be used as LEAPS option strategy. And you definitely can't just go out and buy any stock to use this strategy. So stay tuned for that. Now, for today's video, we're going to be using Chipotle. Now, this is a very popular stock, and the reason why I decided to use it is because it just recently had a stock split. Now, right before we continue, I'd really appreciate it if you guys were to like and subscribe to the channel so we could continue bringing you these awesome videos and we could get better at our craft. Now, like I said, for today, we're going to be using Chipotle. Now, in order for you to get into LEAPS option strategy, let's first go into the options chain. Now, to get into the options chain, we need to go to Trade CMG Options. Now, Chipotle, the name of the company is Chipotle, but the actual stock ticker is going to be CMG. So let's go ahead into Trade CMG Options, and then we're going to wait for the options chain to load. So here we are on the Chipotle options chain, and there's a few things you need to know very quickly. Number one is going to be the current share price of the stock. Number two is going to be the expiration date of the stock and whether we're going to be buying, selling, a call, or a put. Now, with the LEAPS option strategy, the first letter stands for long term. So we're going to look to buy a call at a far out expiration date. So for this video, I'm going to go out to probably the furthest expiration date there is, which is going to be December 18th, 2026. And as you can see here, it tells me that's 890 days away. Now, for your LEAPS option, you don't need to go this far out. Anything above 6 months will be considered as a LEAPS option. But for the purposes of this video, I will go with the December 18th call. So here we are on the options chain for the December 18th calls. And once again, the first thing we need to do is verify the strike price. Chipotle is currently trading at $58.29. So the whole purpose of a LEAPS option is for you to be able to control 100 shares of the stock by paying a lot less than this. Now for this, we're going to go ahead and we're going to select our strike price below the current share price. Now, can you select a price above the current share price? Yes. But in my opinion, that is gambling. So now we're going to go ahead, we're going to scroll down to the option chain and we're going to look to find something that's very appropriate for us. Now, as I mentioned earlier, Chipotle just recently had a stock split. So if you look at the stock prices are not whole numbers. Now, the reason for this is that the CBOE, which is the Chicago Board of Options Exchange, hasn't quite identified what's exact strike prices and what they should be trading for. That information is going to come later on after this stock has been trading for a while at this new price. Now, we're going to go ahead and we're going to scroll down. We're still looking for an optimal price in which to go ahead and purchase our LEAPS option. So I've done this before and I'm going to go ahead and choose the strike price of $40. Now, note the difference. This is the strike price as you can see up here, but this here is the share price. What we're looking to choose is our strike price. Now I'm going to go with the strike price of $40. Now there's a couple of reasons why I'm going to choose the $40. The number one reason I'm going to choose the $40 is the price of it. Now, the $40 strike price is now trading for $27.30. Each option contract is multiplied by 100 shares. So if I were to purchase this $40 strike price, I would be paying $2,730. I would be able to control 100 shares of Chipotle. Whereas if I were to go out and buy Chipotle at its regular share price right now, I would be paying $58.21, which is going to be $5,821 to own 100 shares outright. So as you can see, one of the first benefits of getting a LEAPS option strategy is that you're now able to control 100 shares of a stock for a lot less money. Now, the other reason I'm going to go with the $40 strike price can be determined if we go into what's called the Greeks. So let's start here. You cannot be a good options trader if you're not familiar with the Greeks. The Greeks give you so much information which allows you to make a very informed decision about which strike prices you're going to choose, etc. Now, the reason why I chose the $40 strike price is because of the delta. The delta here is 0.86. When I'm choosing my LEAPS option, I usually like a delta of 0.75 or above. So the significance here of the delta is that for every dollar change in the share price, for instance, if Chipotle was to go from $58 to $59, then your option that you just bought at $2,730 would now go up by $86. Hence, that's one of the powerful reasons for owning a LEAPS option strategy. By every dollar Chipotle is going to go up, your entire option is going to go by $86. The other reason I would go with the $40 strike price is because of the open interest, which is $128, and the volume, which is zero. Now, I'm not going to get straight into the Greeks right now. I do have a video about that. I will link it in the description below. Also, the implied volatility is something else that you could pay close attention to. So we're going to go ahead, we're going to select that price. We're going to hit continue, and we're going to choose the amount of contract, which is going to be just one for the purposes of this video. So at this point, after purchasing this call, we're now going to be able to own one LEAPS of Chipotle, which is an amazing stock to add to your portfolio. Once again, this is not financial advice. This is just what I'm doing with my portfolio. Now that we own one LEAPS, we're now able to control 100 shares of Chipotle in our portfolio. Now, right away, as soon as you acquire one LEAPS of Chipotle, you have a couple of choices. The number one choice that most people buy LEAPS is that they're now able to wait until the stock appreciates. Now, I promise I'm going to show you one free resource in which you could know what price in order for you to get into these LEAPS options. In my personal opinion, Chipotle is trading at a reduced price, so I would definitely want to get into Chipotle with a LEAPS option at this price, and I will show you how I came to that determination shortly. Now that I'm controlling 100 shares of Chipotle by way of a LEAPS option, what do I do? Do I just sit here and wait for the stock to appreciate like I'm investing in Apple or Google? Or is there another thing I could do while I'm waiting for that stock to appreciate? Now, I'm very happy that you asked the question. So now we have the LEAPS option in our portfolio. We could go ahead and do a second option strategy, which is called selling covered calls. So here we are on sell and call, and now we need to choose our strike date. Remember, previously we chose a strike date which was far out. Now on this channel, the name is Investment Gains. We show investors how to make revenue on a weekly basis. So what we're going to do, we're going to choose a weekly option, and I'm going to go with the expiration date of July 19th, and it shows here that's going to be 8 days out. Now with the July 19th strike date, I'm now going to go ahead, I'm going to choose a strike price once again. Okay, so now I'm going to go ahead with the strike price, and the strike price I'm going to choose is going to be $61.50. Now, there is a reason for that. The number one reason for this is that once I choose the 61.5 strike price, I will be able to earn 30 cents on this option contract. Now, once again, each option contract is multiplied by 100 shares, so I'm now be earning $30. Now, why did I choose the $61 strike price as opposed to the other strike price? Well, remember, we did choose the buy call with a delta of 0.86. So the rule of thumb now is to choose, while selling your calls, a delta of either 0.14 or below, or something similar. So in this case, my delta is going to be 0.18. Now, I'm not going to go too much into the covered call strategy. I do have several videos on the channel, so feel free to look at that. So we're going to go ahead, we're going to hit continue, we're going to choose one contract, and we go ahead and we do this trade on a weekly basis in order to collect weekly revenue. So if your covered call strategy is going against you, all you need to do is just manage the trade. Now, a LEAPS option combined with a sell call option creates a new strategy, which is called the PMCC. Now, let me know if you want me to do a video on the PMCC. Now, I did promise you some resources that can be used free of charge in order for you to use to determine which stocks you'd like to buy in order to use the LEAPS option strategy. So for that, we're going to go over to a website called Stock Charts. Now, once again, this is free. Now, how do I personally use stock charts? I usually use stock charts just to determine the RSI, which is called the Relative Strength Index. So how does the RSI help? The RSI helps us to determine whether a stock is overbought or oversold. Now, very quickly, this is the RSI index right here. Now, anything from 70 to 50 means the stock has been a bit overbought. The higher it goes to 70 means the stock has been totally overbought. Now, when you go to 50 to 30, the closer it gets to 30, it gives you an indication that the stock has been oversold. And this is one indicator you could use in order to make an informed decision whether this is a stock you want to get into or not. Now, like I said, this is a free resource. Feel free to use it as you see fit. Now, going back to Robinhood. So here we are back on Robinhood, and you simply click the advanced feature, and that should open up a chart. Now, once you get to the chart, you have all these up here which can be used. So we're going to go to the 1 year. If you wish, you could switch over to candle, which most people uses. And then once again, you could use the RSI. It's right below here in order to determine if there's a stock you want to get into or not. Now, very quickly, while we're here, Robinhood does have some other features like the MA10, the MA200, etc., which is really, really useful in order to determine if this stock is one to use for a LEAPS option. Now, investors and future investors, I would like to thank you for taking the journey with me on exploring LEAPS option and the power they create. Like I said at the start of this video, LEAPS option is a very useful tool to add to your portfolio, and you can grow your portfolio exponentially if you manage it correctly. So, investors and future investors, thanks for watching. Like and subscribe to the video, and remember, hit that alert bell to get an alert whenever I post a new video. And remember, this is Investment Gains, where we try to show you how to get weekly revenue from your investments. Until the next video, keep pushing your investments.